Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Wednesday, the 5th of November. I'm recording the video today 6:15 p.m. Eastern Standard Time. I was expecting upward movement. A small green candlestick for Wednesday's session fits the wave count perfectly. The target remains the same at 2035. We're getting closer. It might be met in maybe a couple of days. Let's have a look at the wave counts. I'm adding a new higher target for you at 2191, but it has a lower probability. It has a pretty low probability actually. And I still haven't been able to fix the problem with that cursor. I am aware it is too small. I'm not going to favour either the bull or bear wave count. They both expect more upward movement because they both are seeing an impulse to the upside completing at primary degree and expecting we're in the final fifth wave of that impulse. Once we have a trend change, it will be either at primary or cycle degree. And I will let the structure of the following downward movement and the depth of downward movement to tell us which of the wave counts, bull or bear, is correct. For now, there's no divergence at all between the two. At this stage, the target is calculated at the hourly chart level, so I'll go over that first target when we get to the hourly chart. It has a much better probability. But if price keeps on going up through the first target, then at 2191, primary wave 3 in its entirety would reach 1.618, the length of primary wave 1. The second higher target has a lower probability because it expects that within primary wave 3, both intermediate waves 5 and minor wave 5 would be extended. Intermediate wave 3 already has a nice 2.618 Fibonacci ratio to intermediate wave 1. Intermediate 5 has passed equality with 1, but were it to reach the second target, then it would be close to equality with intermediate wave 3, and they would both be long extensions. That's possible, but it's more likely the fifth wave will be shorter than that. Also, at minor degree, minor wave 3 is 1.618, the length of minor wave 1. At the second target, minor wave 5 would be even longer than equality with minor 3. That's possible, but it's less likely. That's why the second target has a low probability. Every day in the text article, I'm linking back to a weekly chart which shows you exactly how to draw these trend lines. The black trend line is a channel around primary wave 3, drawn using Elliott's first technique at the weekly chart level and copied over here to the daily chart. And it may show us where upward movement may find resistance if it gets up that high. The two aqua blue trend lines are traditional technical analysis trend lines, and when the lower of those two trend lines is clearly breached by more than 3% of market value at the close of the lowest candlestick, then that would indicate a big trend change, so I will use those to confirm the end of this primary degree trend. For the bull wave count, the upcoming fourth wave at primary degree should break out of the channel containing primary 3, so eventually when it arrives I'll expect primary 4 to reach below the lower edge of this black trend line. We have double technical divergence at the weekly chart level and also at the daily chart level so far. I'll expect that divergence should continue, and if it does support the idea that we're having a trend change coming up fairly soon. Let's have a look at the structure of minor wave 5. Actually, just before we go there, when this structure upward from this low here on up to the high, when it is seen as a complete 5-wave impulse, then I will have an alternate for you, which moves the labelling just within this upward wave all down 1 degree and looks at the possibility that that could just be minute wave 1 within minor 5. Okay, let's look at the hourly chart where minor 5 begins down here, this point down here. So far we have 1, 2, 3 has a 2.618 Fibonacci ratio to 1, and the subdivisions have a really typical look within it. That's typical for third waves. 4 is a contracting triangle, so there's perfect alternation between 4 and 2. 4 is a triangle, 2 is a zigzag, 4 is shallow, 2 is deep. Because there's already a great ratio between minute waves 3 and 1, I'm not expecting to see a Fibonacci ratio for the fifth wave. There's also at minor degree at the weekly chart level a great ratio between minor waves 1 and 3, so I won't expect to see a ratio for minor 5, and at intermediate degree there's an amazingly close Fibonacci ratio between intermediate waves 3 and 1, so I won't expect to see a ratio for intermediate 5. What all that means is the target for upward movement to end is best calculated at either minuet degree or, as in per the higher second target at the daily chart level, at primary degree. At 2035, minuet wave 5 will reach equality in length with minuet wave 1. That's the most common ratio between first and fifth waves, so at that point that would be the most likely place for upward movement to end. Draw this small channel around this very final fifth wave using Elliott's second technique from 2 to 4 and then place a copy on 3. When that channel is clearly breached with downward movement, that may be the very earliest indication of a trend change, but it won't tell us what degree the trend change is. Within the final fifth wave, no second wave correction may move beyond the start of its first wave below 2001.01. And as I said at the daily chart level, when this final fifth wave up is complete, I will have an alternate that moves the degree of labelling within all this upward impulse down 1 degree and looks at the possibility that that is just minute wave 1 within minor 5. The invalidation point for that will be at the start of minor wave 5. At the daily chart levels, this is the bearish wave count, and it too expects more upward movement because the upwards impulse within primary wave C is seen in exactly the same way as the upward impulse within primary wave 3 for the bull wave count, because A, B, C and 1, 2, 3 subdivide in exactly the same way. So the invalidation points, targets and expectations are identical. For this idea at the monthly chart level, once cycle wave B or X reaches twice the length of cycle wave A, the idea that an expanded flat, or as well a combination, is unfolding at supercycle degree should be discarded. The maximum common length of a B wave within a flat is 138%. Cycle wave B is already, I think it's 155%, so it's already longer than the maximum common length of cycle A. So that's reduced the probability of this bearish wave count. But it's only when the B wave reaches twice the length of the A wave that the probability is so low, the idea should be discarded. That's all for me today with your S&P analysis, and I hope all our members are having an awesome day.